2, checking 1, 2. Yes, sir. Here we go. Here we go. The Bulls are out. The Bulls are out. How do we play earnings? The Savage stocks having earnings. How do we play them? All right, so let's check it out and let us go see how we are doing. Well, seems like Palantir had their earnings, Open Door had their earnings, and Rivian had their earnings. We love those three. You know why? Because the Savage definitely plays these, and there are three of our Savage stocks. I like them. I'm ready to go at it, and so that you guys can have a good can have a good feel on how I play earnings and what I do um, the day after. If I've written covered calls on some of the stocks, or if I have been on the sideline just trying to see and feel out what earnings is going to do, um, I'm ready to pounce on the next day, right? So it is the Savage of Wall Street going live once again today. This will make 2 times in the day, and I'm ready to talk Palantir. Well, I've been pounding the table on Palantir for 2 years now. The stock was at $8, and I was screaming to people to buy. The stock was at 15. I was pounding the table, telling people this is going to be a $100 stock. A lot of people didn't feel that way. When it went to 20, I was pounding the table saying, do $20 cash secure puts a year out, take the free money, or just buy it, at 20, 22, 24, 25. Anyways, we are where we are. Palantir is it's just destroying all metrics, right? But we have to understand that although stocks just seem to be climbing and climbing and climbing, it's a justified. It's a justified that Palantir is trading 650, times earnings, right? It's $172 at this point. I have $100 covered calls that I sold a while back. Took a chunk of change, but I have some. I mean, it's just ridiculous. Cash secure puts, bought them back already. How do we trade a stock like Palantir, right? Well, if you're holding stock and you've been on the sidelines and you're like, it's going to go to 200, it's going to go to 200, I'm waiting for it to go to 200. Great. Guess what? You can now sell it at 200. All you have to do is get paid for it. What is wrong with that? You've been holding to this dear stock of yours, say for the past year, and it went from $25, $30, $40 to like where it's at now, which is 172. And you've been just anxious because is it going to go to 300, 400? It may, but I mean, how long are you going to hold? And will it? I mean, at some point, it's got to come down, and people have to justify, that it's trading so many times, ahead of earnings at this point, right? And in the future, so you can trade and sell at $200, January 16, 2026. Whether it goes up or down doesn't matter, right? You're gonna get paid $1,600 for your troubles. You could actually go on the market and sell a call for January 2026 and ask is, the bid is 1590, ask is 1615. You could go for tomorrow and ask for 1615. You could ask for 1610, go a penny lower. I'm sorry, a nickel lower than the ask, and ask for 1610. Who knows? There's a gambler out there that is just begging, is just itching to take that bet and give you, $1,600 out of their pocket. The stock is trading at $172 at this point, right? It has to move $28 so that it can be at the strike price to be able to justify their buy, right? this person has to have Palantir go to $220 just to be able to break even, right? 216, $217 to just break even. For him to make, or her to make money, it would have to go to like 220, 230. And even then, it's justified because that time decay is going to happen and the contract's going to be worth less. So you're getting paid no matter what. Say that, for example, Palantir is trading at 205, $210 on that day. Well, you're going to lose your shares, right? You're going to lose your shares. But they're going to give you $20,000. You can now go mark on the market and buy them outright, or do a $200 cash secure put and take more money to buy the stock where it's at or at a lower price. But remember, you receive $1,600, so you're not really selling at 200. You sold at 216. So if the stock is at 205, 210, 215, you sold for a profit. And now you're going to sell a covered call or a cash secure put, I'm sorry, because you got money, right? You're going to get a lot of money right then and there for putting that, $20,000 in escrow, or 19, because if you want to buy at 190, you can. You just took $1,000 off the top. And then you're daring the market to basically say, I'm willing to buy Palantir at 190. It's a 205. It's going to come down at some point. You go three months down the road, bring in $800, $700, maybe a little more. What is wrong with that? You're making money. The point of the stock market is to make money, and you're making money. And if you have been on the sidelines to get onto Palantir, I suggest you wait for a pullback, because August and September are usually months that the market kind of sells off, and for whatever reasons, right? The trend is your friend, and right now it seems like we may be trending down a bit. However, when it comes to my stocks, I'm bullish. And let me tell you why. I was explaining this morning that there is nothing more bullish in the stock market than to take money out of your pockets and put it into your brokerage account and guarantee that you're going to buy a stock at a specific price point. For example, Palantir. Say you're bullish, extremely bullish on Palantir. Okay, and you think it's going to go to 200 sometime soon. Fine, fair enough. Well, I may not share your sentiment, right? But let's just say, for example, you're very, 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 very bullish, and you're like, I think I've done my due diligence based on all this knowledge that I have and information. I'm extremely confident it's going to go. All right, cool. So then why don't you sell a cash secure put January 16, 2026? And the stock is at 172. You think it's going to go to 200? Great. Do a 170 cash secure put. I would even say go to 150, because hey, if it's going to go down, right? If it's going to stay in this range, why not get paid free money? That's the whole point of the market, right? Sell at 150, get $1,293 for your troubles. But you're really, really bullish. You're like, you know what, Savage? Forget that. I know Palantir is going to go to 200. I want to buy it, but what do we do in a case like that? Okay, great. Sell a $170 cash secure put. You're basically saying, I know for a fact it's going to stay here, right? In the next few, I want the stock now. Right. Go to September 19th. It's just, you're going to wait a month and change, right? That's it. So the 170 cash secure put is going for $1,000 right now. So you're basically saying, I'm so bullish on this stock that I'm willing to buy it at whatever it is right now at $170. Great. Put $17,000 down and receive $1,000 for your commitment. There's absolutely nothing wrong with that. Now, the stock may go up, right? And that's going to be worth less. And then it may come down and stay where you want it to be. And then you get your shares put, or the stock may go down even more. And then It's at it's at less than 170. You're gonna get put that stock to you no matter what, but you received $1,000 for your commitment. You win either way because you wanted those 100 shares anyways. Now you have those 100 shares. It may be worth, I don't know, 160, 165, but you're still making money because you got $1,000 right up front. There's absolutely nothing wrong with that. Nothing wrong with that at all. So I like to get paid for buying stocks that I'm bullish on. That's just me. And I think there's nothing more bullish than me saying, here's my money. I'm 100% going to buy this stock on this date. Boom. Give me money for my commitment. That's just basically the name of the game. That's the type of contract that I want. I'm making the shots. And that's why I love Cash Secure Put so much. So that would be Palantir. I think Palantir is a great it's a great example on what can happen to a stock if people are just extremely bullish on that and they hold, right? There it is. It's $170, and I mean, I may not agree with that price right now because I think it went up too fast, and I think it's going to come down. But the fact of the matter is that it's at $172 right now, and it could very well go to 200. And if you're holding Palantir and you're like, I think it's going to 200, then sell it at 200. Take some profit off the table. Nothing wrong with that at all. You bought it at 10, 20 bucks, you're making $18,000 in profit. That's insane. Take the money and run. Because are you going to hold it forever? What's the end game, right? You got to have a plan. So, if you want to hold it until 2029, 2030, that's your prerogative, and you can very well do that. But I personally like to get paid for holding a stock. That's the whole reason I buy them, right? Now, whether it be through Cash Secure Puts or covered calls, I'm getting paid either way. And if a stock, gets called away because the covered calls were in the money, great. 90% of the time, it does not. I will take those odds any day. And this is why I like I said, you have to be comfortable with the price point that you pick. If you think that Palantir is going to 200 and you would be okay selling at 200, then sell a $200 covered call. Now, this is the great thing. You don't have to sell on that date. If on January, Palantir is at 220, 215 or whatever, and you're like, I didn't really want to sell it at 200 now. Guess what? You can roll. You can go 6 months down the line. You can then, all that time has been eaten away. So the contract is way cheaper. You can roll your contract for a more expensive contract. 6 months from there, you go to 225, 215, whatever, and you get paid to roll that contract. So you're making money and making money. You see how it's just a beautiful game, but you have to know how to do it, right? So, and you have to have conviction, as well as you have to be okay if at any point during this transaction, right, between now and January, when this covered call is going to expire, if somebody exercises that call and takes the stock away, you got to be okay with that. There's nothing wrong with that. You're making money. That's the whole point of the game. Who we got here? We got Kent's mom. Kent's mom. What it is? How you doing? Great seeing that you're watching. Thank you for watching me. We're watching The Savage of Wall Street yet again. I'm going live once again. It's the second time today. I know some of you guys may have missed me this morning. I got hurt at work. And, I couldn't go live yesterday. I was in too much pain. Moreover, I was actually, at the hospital and waiting to see a doctor. It took a while to see a doctor. Then I was in severe pain. And gosh, and then they had me do PT yesterday as well, which is ridiculous. I've never heard that, but they wanted to take measurements and gauge where I'm at, pain levels and all that stuff. So, it is what it is. But I'm here now. I'm not as heavily medicated as I was in the morning, because in the morning I'm still groggy from the muscle relaxer. I will take the muscle relaxer probably in an hour because it helps me go to sleep. And then my lower back, although it's throbbing a little bit right now, I'm sitting on this heating pad, which is pretty awesome. It kind of relaxes me a bit. So, I could be lying down on bed, but I did also my exercises. They told me to do some type of exercises, and I did, very gingerly, right? But after that, my back's throbbing a bit. They said I do have to keep, kind of stretching and making sure that I stretch that area because, otherwise it gets really stiff, and that's kind of what I don't want, right? So I'm listening to the doctors and the physical therapist at this point, and then we'll see what's going on. All right, let's see here. So Ken's mom's in the house. Good to see you, Ken's mom, for sure. Ken's mom's a regular. If I could give badges, I'll probably give her. She'll be the first person I give a badge to. Her and Mr. Premium are the option. Premium is in the house. Let's go. Yes, sir. Tom is here. Tom was here during the morning time. Is here now. Yes, sir. The watch market is dead. Mr. Premium. All right, here we go. Premium saying, "What's up, Tom? Any watch buying?" Tom saying, "Looking at Speedy.com, Japan." They're talking about themselves. Ricardo Canales is in the house once again, saying, "What's up, Savage? How you doing, Ricardo? What's the promo referral code of the day, man?" Let's get to the good stuff. That's Nathan Wynn. Nathan Wynn saying, "Oh shoot, hope you are okay, man." I'm okay. I mean, I just, I'm not 20 anymore, so I gotta remember. I gotta remember that whenever I lift heavy things. So I'm saying I see them, Mr. Premium. They're released on collab with Datsun cars. Tom is saying, "Feel better, Savage." Thank you guys, I appreciate it. Savage muscle relaxes with a crown and coach and fit for yep. Easy there, buddy. Easy. Crown, yeah, You know what? Crown and ice and apple juice. For some reason, the apple crown is very dangerous because it doesn't even taste like liquor. It literally does taste just like sharp apple juice. But I kid you not, I had that for my birthday, and I was at the pool. I was actually at the pool, and goddamn, I was lit. I think it hit me when it hits you quick, and when it hits you, because it's so delicious and refreshing, it's just, man. The next day was sad because I was just like I was sunburned, and I was just like I was feeling it the next day. And I don't think I drank that much, but it is dangerous because you could drink a lot of it very quickly. So yeah, it was cool. Jeff S is saying good evening. Good evening, my friend. All right, so now who else has earnings today? Rivian had earnings, and I think their numbers were not terrible, but they did go down a bit. Totally okay. This is a company I'm 100% bullish on. I don't know if you guys have seen those cars; they're beautiful. There's just there's a lot going on right now with Rivian, but let me just tell you that they're backlogged, man. They have so many orders. They can't build those cars fast enough, and their batteries giving you almost 500 miles per charge. And those are beautiful cars. They're so roomy. They're big. 850 horsepower. I mean, the SUVs are absolutely gorgeous. They have a moonroof, and I just like the whole look of the cars. I like how they feel. I've actually I've gotten in one, and man, it's a beautiful car. I really do want to buy a Rivian in the next 2 years, and I really want to do it with Rivian stock. I want to buy as much Rivian as possible and flip it. Doing cash secure puts at this point, and I do have shares as well. My wife does too, and the bottom line is that I want to basically use Rivian stock and then get rid of it and use that money to buy a Rivian. I think that would be like the coolest thing. Anyway, so Rivian is down 4.3% after hours, which is not terrible at all. Um, and I think if you guys have been looking at Rivian, you guys know that I've been trading Rivian for a little over a year now. I really like the stock, and I went in when it was in the 10, 11 land. And then it went up to like 20s. I sold some $15 covered calls and some 20s. I took a chunk of change, and then it backtraced, and then I bought them back, and then I sold again when it popped. It's just at this point, it's very GME-ish. That's all I gotta say. And it'll be lackluster for like a month or two, and it'll kind of creep up, and you can sell covered calls. All that data gets eaten away really quickly, and then it comes down. I buy back my covered calls for like 80%, 70% profit, and then it pops up again, and I do it again. When it pops down and it takes a hit and it goes to like $11, $12 land, I always sell 1250s, no matter what, 1250s or $11 covered cash secured puts out 3 months to 6 months. I bring in a lot of premium, and I dare the market to put those shares to me. And all these shares that I got, they be put to me via cash secure put. So my cost basis is honestly, if I could, my cost basis could be like $5 or $4. I think that would be wonderful. But that's how you do it, right? You do cash secure puts, get assigned those shares, then do covered calls, and then repeat, rinse and repeat. And every time I sell a covered call or a cash secure put, I use that money to buy stock at market price, because at the end of the day, it's free money, right? Like, it's just, to me, it's free shares, and then I can then grow my portfolio. That's how I'm able to expand my portfolio. So Rivian is trading at 1165. What to do tomorrow? Well, I would look for some October 17th cash secure puts, man. It's 1165 at this point. I would not be I would love to buy $11 or sorry, to sell $11 cash secure puts for like 125. Um, Nothing wrong with that at all. I'm getting almost 20%. Um, well, no, they wouldn't be 20. Sorry. It'll be like more than 10%, obviously, to basically buy a stock that I really want, right? Now, if I'm really, really bullish on it, then I could do $12. The $12 Rivian put for October 17th is probably going to give around 150 tomorrow. It's probably going to be 150, 160. I would do 175 stinkers, right? It may trigger at opening because we don't know how this is going to go tomorrow, right? So I see nothing wrong with that at all. You want to go and be on the safe side, do $11 cash secure puts. Now, do you really, really want to be on the safe side and be conservative? You can do $11 cash secure puts for January 2026. Right now, those just opened. They weren't available. There were only 10s and 1250s. Now they've opened up 11s. So I'm very curious to see what these 11s are going to look like tomorrow. The 1250s are 198 as of closing today. So those are probably going to be closer to 250 tomorrow, maybe 275. That is not bad at all. Get paid $275 to buy Rivian at 1250. So essentially, you're buying it at 975. That's insane. That's like at the 52-week low. Let's see, the 52-week low for Rivian was 950. You're basically buying it at the 52-week low there. That's insane. That's my dream, to buy stocks at 52-week low or lower. I'm just like a sniper. That's how you do it. And you grow your portfolio while at it. Nothing wrong with that at all. I wouldn't advise selling any covered calls or Rivian because it's already, it's down, right? So I would wait for a healthy pullback. Cash secure puts is the way to play this. Covered calls, man. I was selling covered calls. I think, I don't know, but for my birthday time, I kind of was selling it in July 20s. I think it was like 15, 16 bucks, and I sold some 15s up to 2026, and I got a nice chunk of change. And now I'm going to buy them back tomorrow. I'm going to set some stinkers, and then we'll see what happens. I actually even have some 1250s for 2026, which I'm gonna look to buy back, or I may roll to 15s. I don't know. I think I'll just buy them back. It'll be so cheap tomorrow. So another one is I think open door. But before we do that, let's see what people are saying. Nathan is saying there are many Rivians in my neighborhood. They are super nice. I can believe the demand outweighs the supply. I Yes, this fact. It is fact, my friend. Nathan is also saying Apple Crown. We're talking about whiskey. That's dangerous stuff. Apple is cognac, I believe. The Crown Royal, Crown Royal is cognac, right? But it's still, I mean, it's alcohol. But it's apple, and the thing is that with the ice and the apple juice, it mixes so well that you don't even taste the alcohol, and that's what I'm talking about. You'll drink 20 ounces of the stuff, and you'll be shit faced. Trust me, you'll be shit faced. Now, if that's the goal, then I think that's great. But I could have gone easier on it. I had a great time though. It was just I didn't expect it to be so dangerous. Mr. Premium is saying plenty of Rivians in my area as well, just a lot more Teslas though. Well, see, that's the thing, right? How long has Tesla been around? Rivian is fairly new, and it's a made in America car. So those tariffs are not going to hit them. Um, Also, people that are jumping ship from Tesla for whatever reasons, I do know a lot of people because of the political views. They decided to just sell their Teslas for a loss, and then they bought Rivians. Some people just decided, I don't want to deal with Elon. I don't want to deal with just being looked at a specific way. I guess. I mean, I live in California, so I guess you know some people have said that, and I hate sounding like that, but I've actually heard some people say that they got dirty looks when they're driving their Tesla. I don't like to judge people based on what they're driving. I mean, to me, they're just being they're being kind to the environment, and they have a nice car, and I don't think you should castigate or look at people in a different way because they're driving a Tesla, which is I think a good car. But again, Rivian is not going after the Tesla owners really. They're going after the F-150 owners, right? Because their deal is the SUVs and the pickups. So I mean, it's great that Tesla owners are now getting Rivians, and that's just the icing on the cake. But they're really going after the F-150 market, and that's what you have to take into account. Now, Tesla's been around for over a decade, right? Um, Rivian is very new. I'm telling you right now that Rivian is going to be $100 easily per share. It's just going to take time. I don't know when, but it will happen. Just like I was telling people that Palantir was going to be $100. I'm telling people that SoFi is going to be $100. I don't know when, because if I did, I would be like with Jerome Powell sitting next to him, making billions, right? But like, you have to have conviction, and you got to just look at the metrics, look at what the companies are like, what they do, and you have to be, you got to put your money where your mouth is. And I'm buying stock, right? So I sell cash secure puts, and I get stock, and I buy more stock with cash secure puts and cover call money, and so on and so forth. And I grow my portfolio, and whenever this stock decides to take off, that's great. I'll keep doing what I'm doing. It's fairly simple. Now, the stock's sitting at $11 right now, 11.60, right? Um, Tesla was $11, $10 at a point, and I think there's even some analysts that were saying when Tesla was $1,000 a share, they were saying Tesla's a $20 stock. I mean, there's always going to be naysayers and people that are extremely bearish on a position for whatever reasons. But you have to take into account your bullishness, right? And in your due diligence and how you feel about a specific company. I mean, there's a reason you bought it, right? I personally don't buy into any company that I'm not willing to hold at least 5 years, but that's why you have to have a plan. All right, so let's see what we got here. Nathan is saying, Savage, no hard feelings. You absolutely grilled me about 5-ish years ago over my thoughts on the Amex Gold Card. Um, you laughed at me for being part of my identity. I was mad at the time, not now. Let's see. So you were so right. It's also silly. Interested in learning from you and what you have to say. One could say that the roasting you gave me was savage. Savage. Well, you write more SMCI tomorrow. Okay. So SMCI, Nathan. No hard feelings, my man. You know what? Look, I actually like the American Express Gold Card. There's nothing wrong with it at all. If you have look, so, and the thing is that it's not good for everybody, right? So if you're somebody that is single, you don't go out much to eat, um, you can't justify the annual fee, right? But if you have someone that has a family and you go out to eat to restaurants often, the American Express Gold Card is actually a keeper. It actually would make you money, right? Because if you're able to use the credits, it works for you. But there's not just one. I mean, there's Chase also has some really good credit cards, right? Capital One has some good credit cards. It depends on one your situation, right? It depends also on your standard of living, right? And it depends on whether you have a larger family or not. So it's not like one size fits all. However, I'm glad that you're here, listening about the stock market, and I'm looking forward to answering some questions you have about stocks and some companies you may be looking at. All right, so here we go. So yeah, Jeff was talking about SMCI. SMCI is $47 because they had earnings and I think they missed, right? So it went too hot too fast, and I told everybody. I sold. I actually bought the shares. I went and I did cash secure puts in the 25s and 30s, and I got put some shares for 26. That's my cost average. So I was doing 30s and then 25s. Um, I did some 35s as well and some 40s, but I took my profit. Now, it ran up really fast, and I sold $50 covered calls for expiring 2027, and I sold $45 covered calls expiring 2027. So I got 1660 for the SMCI $50 calls, and I got 1850 for the SMCI $45 calls. I was underwater. But see, this is the thing. I'm totally okay. I'm totally okay selling my SMCI at $45 and $50 because my cost average is $26. So I'm almost doubling my money, right? On the 50s, I'm pretty much doubling my money. So that's a win. I mean, that's a home run. Do I have to wait till 2027? Of course. I mean, but things happen. You have to take into account that, where the market is, right? All-time highs, where the company is, where it's been, where it's going. You look at the macro events going on. You look at, the insecurity of the market. You look at all the turbulence. You look at this back and forth between, Donald Trump and Jerome Powell. I mean, there's just so much going on. You got the war in Ukraine, now the war in Israel. You have so many variables. And you have to say to yourself, is this accurate? Like, is this really something that it's going to hold right now? I could be absolutely wrong. Of course, I could be grossly mistaken, and it could be like Palantir, it goes to $100. I'm wrong, but I took money off the table, so I'm never going to. How can I put it? I'm never going to be ashamed of taking money off the table. If somebody gives me $1,600 to buy my shares of SMCI, at $50 in the future, and SMCI is $40, I mean, that's a no-brainer. because I could use that money right then and there. And I actually did use that money to do some cash secure puts on probably Unity or AI or Open Door Technologies. Because at that point, I think Open Door was trading for 60 cents, 70 cents a share. And I went fucking nuts and I bought at stock market price and I averaged down and I thousands and thousands of shares I had, and like in the 80-cent land. So I sold at $4. I sold at 4.50. I sold at $3. I sold at 2.50. I sold covered calls that $5 covered calls that expire January in February, and I took in like 2.50 of premium per share. That's insane money that just multiplied so many times that I was able to use from that covered call. So that's just how I played the game, right? I take money from Peter to pay Paul, but always using the same capital that I've created out of thin air, if that makes any sense. And I just grow my portfolio. And so, my portfolio keeps expanding. I keep making money, right? And that's the name of the game. Because my goal is to, like, in 10 years say I think I can retire, because I've been, working as much as I can, and I'm taking money out of like every other paycheck, and I'm dumping it in the stock market, and I'm also creating opportunity and then taking advantage of opportunity whenever it shows itself, and rears its head off of the ground with, you know. When stocks fall 10-15% in a day, and I do cash secure puts, or stocks go up 10%, 5 to 10% in a day, and I do covered calls. And that's just the approach that I take. Now, SMCI, how would I play SMCI? It's down $9, right? 9.50 almost. Tomorrow, what would I do? I would not be shy to write some $40 cash secure puts, man. $40 cash secure puts. Tomorrow, I'm gonna bring you in, I think, around $10, $8 to $10. I mean, if you can get 20% of your investment through a cash secure put, that's a win. If you can get $10, 8 to $10 on a cash secure put, on a $40 cash secure put or SMCI, and I think the IV is going to be over 100 easily tomorrow. Um, I think that's a win. If it keeps tanking, let's say it goes to like 40 tomorrow, do 35s, do 30s for 2026. Hey, I'll go to 2027. The stock will recover. The stock is a great company. It's shorted heavily, and I don't think the shorts have covered. I think they're trying their best right now because it's after hours, and after hours, even smaller amounts of stock can move even a larger stock a lot, because there's not as many traders. So if you have like a ridiculous buy of, like, I don't know, 100,000 shares, well, there's not nobody trading, so 100,000 shares being sold, it's just gonna be like, it's going to be a nice sharp drop, and then the FUD, right, happens tomorrow. So keep an eye on it. I would definitely see what the opening is like with SMCI, and have a plan. Have a plan. I write down my plans. I'm like, I look at what the cash secure puts are looking like. I look at the strike zones. I look at the dates, and I look at the volatility, the volume, open interest. And then say, okay, if it goes to 40 tomorrow, um, look at your portfolio, look at what you have available for capital, right? And say, I have $4,000 available, $8,000 available. I could do 2 cash secure puts for January 2026, $40 strike, and I'm bringing in 1,000 per. That's $2,000 in your pocket, 25%. What is wrong with that? Absolutely nothing. And if you get put those shares, in January, well, guess what? You just bought a stock that was worth pretty much $70 at like half that. It's going to go back up. This is a $100 stock. Make no mistake. And you got it on the cheap because people got scared. Paper-handed weenie babies, man. But take advantage of that. That's opportunity, right? The stock is down near 20%. I mean, I strike at 10%. When the stock goes down 10%, I strike. 20% is a wet dream. 17.5% is a wet dream. I would tomorrow for sure go in with some cash secured puts and see what the market gives me. I got to move some stuff around because I may do more than one or two. It's just a great stock. I like it. I like the stock. What can you do? So open door. Open door is down 25% right now. My covered calls. I have $2 covered calls that I sold fives and to February, and I just keep coming down the ladder, and I just moved down my strike. I haven't even moved down the strike date. I just come down on the strike price, and I just ask for money, and they give it to me. So it was at 5, then it was at 4, then at 350, then at 2. I keep bringing premium in, and I haven't even moved the strike date. So at this point, I'm gonna see what it does tomorrow. If it goes to 150, hell, I may do some cash secure puts. I may do some 150 cash secure puts to January. And I assure you, those 150s are probably gonna be in the range of 50 to 75 cents, bringing in 30, 40, 50% for a cash secure put. That's insane, but it does happen. So would you buy this stock, for say 60 cents, 70, 80 cents? That's pretty much what would happen if you do a 150 cash secure put and you get paid 60 cents for it. You're basically buying at 90 cents. The 52-week low was 58 cents, something like that. So you're near the 52-week low, and you could get a ridiculous amount of shares. This stock is very shorted. All right, so it traded 1.5 billion shares 2 weeks ago, back and forth. 1.5 billion with a B. That just tells you just how shorted it was, right? And I sold thousands of shares already. This is just house money at this point. So I'm just gonna see what it does, and I don't have a problem jumping back in via cash secure puts and maybe selling 150s. It all depends on how much premium it gives me. But like I said, if I can take in 50 cents of premium, not 60 cents of premium, that's a big win for me, or more. You could be less cavalier than I. And if it dumps to 150, 140, you could do $1 cash secure puts. Get paid 50, 60 cents, 40 cents for a $1 cash secure put. Nothing wrong with that at all. What do we have here? Nathan is just talking about the card. Rivian is only 11. Yes, Rivian is only 11, and I would love to buy it at that price via cash secure puts. The gold card isn't what it used to be. Nathan is saying. I agree. It's definitely devalued a bit, but I have it. I have family. I have a large family, and I use it for groceries, and I get 4x on my groceries, and I use it for restaurants. We go out to restaurants, and it makes sense because I also I use Uber Eats or Uber, and then we have the restaurants that give you that credit. There's a lot of those around my area, so I essentially pay. I get paid to have the gold card because there's a Dunkin' Donuts around here. So I get $7 in credits every month on Dunkin' Donuts. So I actually get paid to have the gold card. And that's what I mean by it's got to make sense, right? It makes perfect sense to me. Would love to hear your thoughts on leverage ETFs or SPACs. Okay, so SPACs, look, IPOE, right? There was SoFi. I got into some SPACs. Palantir was a SPAC. But honestly, man, I'm not even looking at that. I have my core, savage stocks at this point, and it's all about generating cash flow every month, trading cash secure puts and covered calls from stock that I already own. I'm not saying that I wouldn't jump back into SPACs, but at this point, I spend just too much time researching companies I already own and just seeing how the market is moving. I have 3 kids, right? So they're all, very young. So They require a lot of time. I work full time as well, and that requires a lot of time. So it gets to be a bit much. I'm not a full time trader. I'm an investor, and I would like people to take that approach as well. I don't want you guys to be gamblers. I don't like the 0 day to expiry covered calls or puts. That's gambling, and I don't want people to gamble. I want people to be savvy um, entrepreneurs when it comes to their portfolios, right? And this is why cash secure puts on days like SMCI had today and in Rivian, um, because you're taking a very conservative approach to investing and getting paid to buy shares of a company that you want. I mean, that's insane, but it's legal, right? And you can do that, and you can dare the market to come get you, and then finally, when you get assigned those shares, um, hell, go nuts. Sometimes it's better to just buy the stock. Whenever you've grown your portfolio to a specific size you want it. At that point, you can start saying, you know what, I want to start buying more, at market price and average down or average up. If you feel very bullish on a specific stock, and then sell covered calls. That's the way that I do it. Let's see here. ETF. So okay, the SQQQ I trade. I trade SOXL. And those are both that are inverted, right? They're leveraged 3x to the market, and they're different, right? One is a semiconductor um, kind of bullish ETF, if you will. Sorry, bearish, and then the other one, and it's pegged to semiconductors, and the other one is pegged to the Nasdaq, which is the SQQQ. So that's SOXS. I also dabble in SOXL when semiconductors take a really big hit, because that's the leveraged, inverse ETF bull. I think it's 2x or 3x leveraged. So, but I mean that's getting a little fancy, and I don't want to confuse people, but I mean I do invest in those because they're kind of they're like a safeguard, right? The stocks don't only go up, and stocks don't only go down. And I like to always hedge my positions, and that's kind of how I do it. SPACs more than leverage ETF because, well, I say, at this point, SPACs, man, I just buy SoFi. Just buy SoFi. Um, this is not financial advice, right? This is just for entertainment purposes only. But if I was looking into like spending some money that I had and getting to like investing, I would look at companies that have been severely beaten down and are in good markets. And I would look at their board. I would look at who their CEO is. I would uh, do my due diligence to find out, where their CEO comes from, where their board comes from, who is in their board. Have they jumped ship from somewhere else because they got in trouble? Did they move because they were given a job at this company you're looking at, and they're just a great analyst or a great CFO, great CTO, COO. I mean, you got to take all those things into consideration, right? And then make your call. But at this point, yeah, no, there's so many SPACs that became good companies, and there's a ridiculously more SPACs that became bad companies, and now they're done. But I mean, look at Rocket Lab, right? Wouldn't hurt. Look at SoFi. Um, you know, look at Lyft. Look at Uber. Uber is still. I mean, I would wait for Uber to come down to 70, but Uber is a great company. Why not do your due diligence there? All right, let's see. Andres de la Torre is in the house saying, "What's up? How you doing, Andres?" Charlie saying, "Hi, Savage. You know you were gonna be on. Good thing I'm catching up now. What do you think of Navitas?" Oh, Navitas. Okay, NVTS. You know what? NVTS, I think they missed, and I am looking for some cash secure put time. Yes, they did. So they're down 16% for the day. Totally okay. Great company, very well ran. They just signed a contract with NVIDIA. That's all you need to know. Of course, that's not all you need to know, but you can do your own due diligence. I like it. I can't wait for open tomorrow. I'm gonna do some. I hate the fact that September hasn't open. I mean, October hasn't opened, but I'm probably gonna go to December on this one, and I'm gonna do some. I'm looking at some $7 cash secure puts. We'll see what happens tomorrow. Obviously, if it comes down to like 650, 640, then I'm gonna do $6 cash secure puts, and I'm going to try to get at least 130 for cash secure puts. $6 cash secure puts expiring December. I'm looking to get at least 25% back on my investment. So if I put $6 up, if I could get 130 back, that would be wonderful. 135, 140, great. But I'm looking at $6 cash puts for sure, because I would be essentially buying at under $5, right? And that's where I'm. The closer to like mid fours that I can get, the better. Navitas is. I mean, look, it was $1.50, right? And it shot up because people started realizing it's actually a good company, and then they started to talk with NVIDIA. NVIDIA decided that this is actually a company they want to do business with, and it just skyrocketed to 948. It was too hot, but I totally feel comfortable going to the midpoint between 950 and 150. And that's kind of like that sweet spot to me is like the 550 to 450 area. This is why the $6 cash secure puts. Now, could it go lower than this? Of course it can. But I would be 100% comfortable buying at like in under $5, and then if it's at $4 at that point, then I'll do $4 cash secure puts and try to get $1. Try to get 20%, so that I can then dollar cost average down, and then just get more shares at that point. That's the name of the game. Yeah, that's I like it. I think it's not going to go back to 4. I could be shocked though. I could be wrong, but it's definitely on my radar, and I'm very looking forward to selling some $6 or $7 cash secure puts on it for sure. Looking at December, let's look at September too, though. I will look at September, December, maybe even January. All right, so let's see here. Andres de la Torre saying NVTS went down a lot. It did, but SMCI did as well. And they're very similar. Look they both went down 17%. It's there's nothing that would stop me from doing cash secure puts. Not at all. Market didn't like open guidance. You know what? Wait till interest rates come down, my friend. Open door is gonna go through the roof, but it's just it's a $5-6 stock. Don't I'm not saying it's gonna go to 100, but it's a $5 and $6 stock. It's been heavily shorted. It's been heavily shorted, and then the shorts are obviously driving the buzz at this point. But once interest rates come down and they go to like 4%, 3% again, and they will, that stock is gonna fly. Watch. You can look back at this video then. Yes, it is time for cash secure puts, Andres, for sure. For sure. Nathan is saying, I get it, man. SPACs take a lot of personal time, and we're quite exhausted. They were nice to me, but it did take its toll. It does take a toll. Dude is saying Savage is the man, late night chilling. Well, it's 8:18 where I'm at. Remember, I'm from California, so MSTR. I'm not on MSTR. Beach Boy saying, was trying to sleep. See you on there play. Savage. Oh, the replay. Beach Boy, have a good night, my friend. Shalom, wherever you at. And I will see you tomorrow. But yeah, look at NVTS tomorrow. Look at SMCI, Beach Boy, because I think tomorrow cash secure puts are going to be juicy. Very, very juicy. Don't be scared to jump into Rivian either. In the interest of full disclosure, every single company I'm talking about, I trade. So I just want to make that clear. Obviously, I may have a bias towards the companies that I am trading, but I can assure you those are good companies. It's up to you to do your own due diligence, but I'm I'm pretty good at choosing stocks. Not saying that I haven't shit the bed 2 or 3 times here and there, but my track record is really, really good. You can, I mean, there's the tape. You can look at my past videos and then you can make your own judgment, right? But just Palantir alone, right? Palantir, I was talking about Unity, you know, I was talking about Roblox when Roblox was $20. I mean, there's a lot, right? I was talking about SoFi when SoFi was like $8. It's just all you have to do is watch the tape, right? So Nathan saying, I subscribe to Savage. I'll keep an eye on the future videos and live streams. You probably should too. He's making sense. Well, thanks, man. I appreciate that. Chase Rosita Parker in the house. Welcome, Chase Rosita Parker. Nice to see you. I know you're from the Uncle Bruce channel. I appreciate you tuning in. Kilua Dre saying, good evening, Savage. Good evening, my friend. How are you? Nathan saying he's going to retire for the night. Have a wonderful night. You have a good night, my friend. Good to see you, Nathan, and I hope to hear back from you and see how your investing is going, man. Hopefully, we'll both get rich together. That's what this is about: making money and having the community tell me just how well they did, and how much money they're making. I really feel good when I hear those stories. So, all right, we've talked about Open Door, Palantir, and Rivian. Those are the 3 stocks I kind of wanted to talk about because they had earnings. The Visual Arts is saying, "What's up? What's up, my man? How you doing?" There's so many more stocks, right? Lucid had earnings; they're down a bit. Lucid is gonna be making money, man. Don't be afraid to go to November and sell some $2 cash secure puts and try to bring in 40 cents. That's 20%, right? What bank is going to give you that? No bank is going to give you that type of premium. But that being said, it's been an hour now, you savages. Right? So I think I'm going to turn in for the night. I'm going to go take my medication because my back is starting to hurt a bit now. But it was great, going live here in the evening and seeing what you guys are doing. I know that you guys are itching for the market to open tomorrow, as I am myself. So I'm going to go live tomorrow around 8:30 in the morning again, give or take a few minutes, right? But I will be on tomorrow at 8:30 a.m. California time, so 12 hours from now. Look for me, and we'll talk trading. We'll see what the market's giving us, and then we'll get to see where SMCI is at. We'll get to see where Rivian is, NVTS, SoFi, Matterport. No, Matterport doesn't exist anymore. Sorry, but Matterport made me money. That was a SPAC, by the way. We're gonna see what Open is doing, BBAI. We're going to see what Riot is doing. We're going to see what Roblox is doing. Sentinel-1, that's a baby. Sentinel-1 is at $17.50. If you can sell a $17 cash secure put or $18 cash secure put and bring in $1.50 to $2, I think that is a great company to buy. Great company to buy. SMCI is going to do their thing. Archer is going to do their thing. GME's green. SOXS, we'll see what SOXS is doing tomorrow. RXRX is a baby of mine, and it's taking a little beating today, but you know what? It stays within that $5.50 to $6 range. Notice how it's not $4 anymore. It's not in the threes. It's not in the fours. It's not really in the fives. It goes up to 6 quickly, comes back down, but it's between it's 6s and 5s now more often than not. So look for it to stay, come back to 6, and go between 6 and 7. it sneaks up on you. So I sold like 40 covered calls out to 2026 when it was in the 650 range. I sold some $10, I think, some 750 and some $10 expiring January. And I'm looking for those to decay, and I'm going to buy them back for 50, 60% profit. And then I'm going to wait for it to have a nice, healthy day and then sell some more covered calls. That's what I do. That's what I do, and that's what I'm trying to teach you guys. All right, we'll see what AI is doing. C3.ai, Unity. There's so many stocks, man. So many stocks, and I can't wait to see what the market brings us tomorrow, and for us to make some money tomorrow. Anyways, I'm the Savage of Wall Street, simpletons and degenerates. You guys have a great night. I look forward to seeing you guys tomorrow morning, 12 hours from now, to see what the market is giving us and to make some more freaking cash. Until then, peace. Have a great night later.